Welcome to the first episode after a long break. Right now, I'd like to introduce you what happened during our absence. So, what were the economic calendar events since 10th of July by now? And right after, we'll make the recap of what may happen during next days. So, right now, in this live stream edition, I would like to tell you that our episodes will be published right before the market open every single working day, every single day where US markets are open. So let's get straight into it. So at first I'd like to show you that on 10th of July, on Sunday, we had machinery orders. There were not many events from Europe as well as Asia and United States. So right now, in the days like this, on weekends, we have some data being published from especially from Asia, as right here. Machinery orders, there wasn't maybe the most important event that happened that week, but needs some attention as well. So in terms of machinery orders in Japan, we have dropped to minus 5.6%. So it means that right now Japan, despite this quantitative easing, is struggling with keeping the pace of a growth as it should be for a developed country. Right now, Japan is also slowing down, not only this country, but nearly everywhere. We can show and observe that slowing down is noticeable. On Monday, we had Westpac consumer confidence from Australia, and this one collapsed to 83 points. And in terms of longer term horizon, we have just dropped to the levels recently been seen during this global financial crisis, and right back then in 2020, right after pandemic outbreak. So that's something that shows that consumer confidence right now is at a very low level, and the RBA has a very hard nut to crack in order to find out the solution for that problems. This very low, I would say, consumer involvement into the market. On Tuesday, we had a CTW Economic Sentiment Index from EA, that's Euro area, and also from Germany, and both of them turned lower than expectations, and dropped to minus 53 points. That is even lower than it was during this pandemic outbreak time in March 2020. So it means there is right now one of the lowest points ever been observed in terms of this indicator. Let's get further. We had Fed Barkin speech that has moreover tried to consider whether the Fed has a chance to hike interest rates over 75 points on the next meeting that may occur tomorrow on 27th of July, and that one stands to the point that it will be relied on what CPI gauge may turn out on the Wednesday. On Wednesday, we had unexpectedly high CPI that turned out to be, as here, inflation rate year-over-year at 9.1%. That's off the chart and hasn't been observed throughout nearly or even over 40 years. So that's something that investors are really worrisome about, is that the inflation is not looking like peaking any time soon. So markets are awaiting the next gauge to be published that also will be will get published on next during next sessions. Right, so from France we had also inflation rate that maybe it's not as bad as in the US or other weaker European countries, but 5.8% is still something that is really makes the French government a bit nervous. So right now that's from France. In terms of Great Britain, we had GDP, so let's get into this for a while. GDP from United Kingdom has turned out to be higher than expectations at 0.5 points. It means that services output grew 0.4% in May, led by human health and social work activities 2.1%. So it means that despite this all doing gloomy voices that UK is going downturn into a recession right now, we can find there is still a chance to get UK's markets out of this trough. So that was United Kingdom one. Right now I'd like to have a look at the Bank of Canada interest rate decision, and it turned out to get at 1%. So they hiked interest rates at 100 points, and that was a very, very high. That was the move that haven't been seen since 1918. That was the one that has surprised the market, and that is the one that also gives kind of a green light for Fed to hike interest rates as well at that level. So it will be very interesting to watch. Unemployment rate, however, from Australia, that's lowest since the day that this gauge ever been published. So it means it gives even more room for RBA to hike interest rates. So that was from Australia, and on Friday we had retail sales from US that shown us that this sentiment is getting a little bit stronger than it was back, and right now we are staying above the negative territory, so it means we still have a chance to avoid some kind of a harder recession in next months. Retail sales is very important gauge that shows us the sentiment around consumers. So, all right, so that was Friday, but we had also Michigan consumer sentiment, and that was also better than expected. On the next week, the week ago, on a Monday, we had housing starts from Canada that turned out to get a bit higher than expectations, but lower than previously. So it means that the sentiment around the market is not very bad, but it's getting worse at the slow pace. On Tuesday, we had from US very important housing starts right after the Canada been published, and that one also turned out to be a bit. Sorry, it was a little bit lower than expectations, but still around this. I would say levels that been expected. So building permits, this one, however, was a little bit tiny and better than expectations. What I've omitted was from Great Britain unemployment rate that turned out at 3.8% as forecasts, and we are jumping right now to Wednesday that shown us that inflation rate from Canada is a little bit higher than what we have also projected. So 8.1%, it means that this gauge has jumped for about 0.4 points. So what's very important was the consumer confidence flash from Euro area. I would say that one is showing us that we are still getting weaker, and this is really also based on a very low level of this gauge from Germany. So whatever is happening in Germany, it usually impacts the behaviors on the whole euro area. So right now we are in a kind of a tough situations. On Thursday we had ECB interest rate decision, and that one has surprised the market by 0.25%. That's why Euro USD currency pair has jumped recently to around 1.03 points. So it means this situation gives some fuel for the future growth if ECB rate decision remain that hawkish. On Thursday we also had inflation rate from Japan, and that one is still staying at a low level. So it means this quantitative easing right now is not showing that the money is not showing any signs that money are flocking the market on that extent that the consumers should be worried. Right now the Bank of Japan still decides to remain that stance that they are by right now. On Friday we also had retail sales from Great Britain, and that one shown that Great Britain hasn't slowed as the economists were projecting, and it means that we still have a chance to save this country from much of a bigger downturn. And also Friday was the one that shown us the services PMI from a couple of countries. From French, that's still above 50. However, from Germany, it dropped to 49 points. So it means we are technically in a bearish territory, exactly where we were back at the end of 2021. It is very interesting what the future gauges will bring to us. From Canada we had retail sales, and this one shown that month over month is getting better. So Canada is one of these countries that is going through this turmoil in a quite good way. Right, so we are jumping to this monster week where we have lots of events being published. So which of them are the most important? So let's get straight into a Tuesday that recently we have been. Let's jump to Monday, of course. On Monday we haven't had many of events being published. We had Bank of Japan monetary policy meeting minutes that hasn't brought anything pivotal. So let's get back to Tuesday. On Tuesday we had new home sales that have yet to be published, and that's one that is very interesting to watch. However, as one of a very important as well is S&P case-share home price year over year, and that one is showing that we are dropping by 0.7 points. Right after we will have inflation rate from Australia, and that's also of importance. And on Wednesday we have many of important data to watch, and among them there will be a consumer confidence from France and from Germany. And that's important to measure the sentiment around these countries. And on 2 p.m. and 2:30 we have Fed interest rate decision. So it's very important to check what will happen, whether we will have 0.75 points or even 100. It means 100 points or 75. As we know, many of the market participants are expecting this one to be hiked at over 0.75%. So every other gauge will be kind of a surprising for the market. If we'll hike at a bigger pace, it would mean for us that the Nasdaq 100 and also major US indexes are more expected rather to go downturn rather than upwards. So in other situation we'll have a more room to grow for US indexes. So that is from Wednesday. On Thursday, however, we have inflation rate from Germany and economic sentiment from Euro area. Also initial jobless claims from US and unemployment rate from Japan. On Friday we will have very important gauges from Euro area as GDP growth rate year over year, and also very interesting from Canada GDP month over month. So we are observing those gauges, especially to consider whether we are technically in a recession or still trying to get out of this bad time, at least regarding those indicators. Right, so from economic calendar, that's it. However, we have also very important week in terms of earnings announcements, and let's have a look on Monday what happened over there. The only company that had its earnings was Infosys, and that one has surprised to minus 11%. So it means the surprise was at minus 0.02 points. On Monday, this was Sunday. On Monday, however, we have AGNC investment and that one was surprisingly good. A semiconductors company was also one that surprised to the upside, and also on that day we had Whirlpool that also was one that shown better than expected publications. On Tuesday, so today we have Microsoft that will be yet published, a General Electric that turned out to get us as surprised to the level 0.4 higher than expected, and it also coincided with a jump in terms of price at the level 2.69% higher. From General Motors we had a surprise to the downside, and price has changed to by 4%. In terms of Coca-Cola, we have better than expected data, and in terms of McDonald's as well. So we can find it those I would say those companies that are in a more stable model of a company that showing us that right now the market is favoring those long-standing ventures that are developing slowly but surely. So we can find that the market is not returning as of right now to those growth companies that are suffering from severe losses, but those I would say very old in many cases, and also I would say that those resilient companies are going in a right direction, even during this tough time. Okay, on Tuesday, let's have a look quickly what we have right there. There is Boeing, Ford Motor, and Qualcomm as the most important one, but I would also take in consideration on Etsy and Shopify as well. On Thursday, let's have a look at once. There is Apple, Amazon, Intel, Roku, MasterCard, Pfizer, Merck, and this is the very important day to wait. On Friday we have AbbVie, ExxonMobil, Chevron, Procter & Gamble, and Bridge, and that's it from the most important events. So this week is getting very, very hectic in terms of what inflation rate, and especially what will Fed say on the going situation, that the market reaction will be as expected to what the projections are. So we need to be very cautious in terms of taking any investment decisions, and if you are not sure of what will happen on the market, better stay aside and wait for the clear signal. Tomorrow I will present you the biggest spectrum of issues regarding whether it's crypto, whether it's stocks, and whether it's indexes and commodities. So I will show you the full episode as it was back in the previous episodes. So it will be a little bit maybe extended, but I hope it will be very worthwhile. So If you enjoyed this type of content, just give us the thumbs up, and if you have any questions, just comment in the comment section below the video. We are seeing each other tomorrow. Thank you very much for watching. See you there.